key global risks in 2025 and their influence on GRC frameworks as introduced. My name is Peter. Thank you so much for that introduction, Deep. And I'm going to kick straight off and talk a little bit around risk and GRC. So we speak about, well, the influence that global risks currently have on GRC frameworks. So I'd just like to give a little bit of context. So GRC, of course, an integrated framework within organizations focused on integrating aspects related to the areas of governance, risk management, and compliance. We are focused today on one of those three elements, which is, of course, the risk management area, and looking at how global risks within our space influence us in terms of our GRC frameworks. So why do we have GRC frameworks? Well, GRC frameworks are there as strategically focused frameworks to support and assist the organization in driving the achievement of its strategic objectives. And those objectives are invariably based on the creation of value. And looking at the concept of value, I'd just like to make it clear that value relates not only to economic value, which is very relevant in most organizations that are operating on the basis of driving profit, but of course is also based on other areas of value creation. So if we take governments, for example, government that are involved in many facets like energy provision, water provision, education, healthcare, these are all areas that government focuses on with the view of driving value through the delivery of fundamental services that then in turn enables the population within the countries to drive economic well-being across the country as a whole. So understand the concept of value creation is broader than pure business operation and economic gain. So value, being the focus of organizations, is in itself associated with risk. All organizations, be they private or government, need to take risk to be able to create value within their environments. And that means that value is by default a function of risk and return. And we take risk to create value, and we manage risk to protect value. And I think that brings in one of the key focus areas of risk management within an organization. It's always interesting when you ask people, well, what is the key focus of risk management? Many people will talk about risk management as a functional area that focuses on managing the potential negative impacts of events on the organization. And of course, risk management is far more than this. Risk management's key focus is twofold. The first area is the identification of opportunities, which is opportunity management, opportunities that allow the organization to drive value creation going forward. And once those value creating opportunities have been identified, which of course are key to formulating strategies in the organization, the risk management function then focus on identifying on a continual basis the risks that are relevant to the environment in which the business operates, so that the organization can determine how to best manage those risks, manage the potential negative impact. So value creation and value preservation. And a basic principle is that organizations need to balance how they take risk to be able to drive value creation within the business environment or organizational environment, and ensuring that they have that, what we call the sweet spot of taking the right amount or right level of risk to drive value creation through opportunity. Now, speaking of value creation, I'd like to just expand a little bit on that before I get into the area of global risks that we have at this point in time. So as I've mentioned, risk management has as a focus not only the aspect of negative impacts associated with risk, but also the ability to drive value creation within organizations through opportunity identification and management. And I'm going to talk very quickly around a framework that was developed more than 10 years ago, the International IR framework, which currently falls under the cover of the IFRS, the International Financial Reporting Standards Foundation. And the IR framework is focused on driving integrated thinking within organizations. And why this framework is of value to today's webinar is GRC as a framework is focused on integrating governance, risk, and compliance. And here again, we make reference to a framework that's focused on integrating certain areas. Now, the framework looks basically at an organization in terms of its inputs. It looks at the organization in terms of its outputs and the business model that exists to be able to drive those outputs based on the inputs created. But it goes a step further and it looks at outcomes. And a very simple example, if I were to take an oil and gas major like an Aramco's key focus in terms of output is oil and gas-based product, but the outcomes of those products is the provision of energy capability on a global basis. So the ability to drive in organizations beyond Aramco, the ability to drive energy, which in turn creates value downstream. When looking at the business model, the organization understands two things: what the external and what the internal influences are on the business within the space in which it's operating. And this is where risk management starts playing a role. External and internal influences, of course, a very dynamic space. And we understand that the external environment in which the business operates and its internal environment continue to adapt and change as the organization moves along. And again, one of the key aspects that risk management focus on is on continuously identifying how changes in the environment influence the opportunity and risk space. Now, looking at risk and opportunity as one of the elements in our business model, we look at risk and opportunity, and this, of course, is where risk governance comes into play, how boards of directors give direction to the organization as to how risk is to be managed, and giving direction in terms of the structures that need to be put in place. And risk and opportunity management is a key input into strategy formulation. So we use the opportunity-based information to identify where the opportunities for value creation are, and based on that, the organization will formulate strategies, and those strategies are then implemented in the organization through creating governance frameworks. And those governance frameworks are basically, I always say in simple terms, the people, the processes, and the systems, the policies, the procedures, the structures that guide the organization in how to implement the strategy. That's governance. So risk is a key input into strategy, which then drives governance, and governance in turn, compliance comes into play in terms of ensuring that governance and risk management frameworks operate effectively. So risk as a key input into strategy and resource allocation. When the strategy is implemented, that's where performance comes into play. And at the performance level, again, I'm not going to focus that much on the G and the C, which is where KPIs and KCIs, those are our key performance and key control or key compliance indicators come into play, I'm going to speak very quickly more about the KRIs, which is, of course, our key risk indicators. And again, when we look at the environment in which we operate, it's always around understanding, well, what are the key risks? And how should we establish indicators that give us insight into understanding how the environment in which we are operating, both internally and externally, how that environment is being influenced, to give us insight into determining how best to adapt our strategies based on changes, or how best to mitigate potential negative impacts. And the last area is around how we use that performance-based information to be able to make meaningful decisions around what the outlook of the organization is going to be. And this is where leading indicator-based information comes into play, as opposed to utilizing lagging outcome-based information. So broadly speaking, what I'd like to just leave with this slide is, from a risk management perspective within the GRC framework space, risk's focus is on providing key inputs into strategy formulation and is on providing key inputs into performance-based information as it relates to risk management, to give clear insight into how the risk and opportunity-based space is influencing the organization in terms of it being able to achieve its strategic objectives. Now I'd like to move on to the risk area specifically, which is, of course, our webinar, Key Global Risks. And I'm going to start off with an area that is a hot topic. Everybody talks about the area of trade tariffs and how trade tariffs are influencing global environments. Now, very interestingly, it is actually not necessarily one of the key global risks at this point in time, but it is something that demands a little bit of attention, given the fact that it has a key impact in various areas. So I extract information from 3 sources, and around trade tariffs, I'm just going to talk around some information that's being provided by the IMF, the International Monetary Fund. And a note that because I used published information, it doesn't necessarily relate to information as of today. Notice this is as of April this year. There have been a few changes in this space, but not fundamental. So trade tariffs, from a US perspective, and of course with the current Trump administration, that's where tariffs started, the imposition of tariffs. And we've seen what's happened in the tariff space. It has provided us with a lot of maybe gray hair, if I could. But the imposition of tariffs, US tariffs are at their highest level in over a century. In actual fact, highest level since the global depression. So very interesting to see how the tariff space is changing. But global tariffs overall are also rising quite sharply. And what we need to understand with what tariffs are doing, and tariffs to a certain extent from a US perspective are purely there to manage the imbalances that existed between tariffs imposed between different countries. And you will find that to a large extent, the United States' import tariffs were lower than the tariffs that were imposed by many other countries across the world. So they were just looking to correct those imbalances. At the same time, of course, it's driven around driving economic growth and well-being on a country basis rather than on a global basis. So what tariffs are going to do, and what they are doing, is they are going to significantly influence the economic outlook that exists. And many organizations, when looking at their strategies, of course, consider their positions in terms of the outlook economically, what are growth rates going to be, etc., when deciding on strategy implementation. And what comes out of tariffs, and that's what's key to our current discussion, is how do tariffs influence the economic outlook? And what are the risks to the economic outlook that we need to take into account as they pertain to our business? Now, very interesting, the IMF, as of April, from the beginning of the year, had downgraded global growth forecast by 0.8%, which is quite material. 0.8% downgrade is high. And looking at the chart that we have, you'll just see, interesting, that whilst trade tariffs in the US space, specifically on imports, have grown materially from very low levels at the beginning of the year to in the area of the mid-20 percentage points by the beginning of April, the world average, you can see, we've basically seen around a doubling of trade tariffs across the world. And what that's doing is it's influencing, as we said, economic growth, and it's also influencing the inflation outlook. And to some extent, it's actually driving deflationary conditions in certain areas. Of course, negative growth in inflation. And deflation brings a very different set of risks into the picture as opposed to inflationary risks. And all I'm showing on this slide is giving some insight into where the IMF are positioning the global outlook from both a growth and an inflationary perspective. You'll notice that growth, it substantially varies across areas. In these two charts, we have 5 key areas: the United States, the Euro area, China as a key global player, and then we have the other advanced economies and the emerging market and developing economies. And tariffs have a different influence in each of these areas, specifically in the area of growth. You will notice that the impact on growth in the United States is much lower than the impact, the negative impact is much lower than the negative impact across other areas. But overall, we have a 0.5% decrease in growth across all areas for 25 and a 0.3% decline for next year, 2026. And these declines in economic outlook will influence the risk space within which organizations are operating and will influence how they position themselves strategically. From an inflationary perspective, notice that China is actually showing deflationary conditions, and that is due to the fact that China has up to now been vastly an export-driven economy. It's one of the key challenges China has been dealing with in the last few years, is trying to establish a more meaningful level of local consumption. And it's one of their key pillars of their strategy right now, is to drive internal consumption of locally produced product. But given the decline in Chinese export, they are showing deflationary conditions. The last point I'm just going to make quickly on this is around, as you can note, the negative supply shocks that exist. So we operate very much in a global space, and for many commodities actually transfer across global trade platforms multiple times before ending up in a final product. Meaning that you will have raw materials going from one country to the next, which then gets done in a production facility to produce an element that goes to another country and ultimately ends up, after multiple global supply chain changes, at its end point. And what trade tariffs are going to do is it's going to drive decreased global trade, and it's going to drive increased local production capacities. And that is going to mean that there is going to be reduced levels of productivity because of the dynamics associated with producing items less competitively within local spaces as opposed to importing those products. and it's going to drive a reduction in innovation within business spaces. So another two things that one needs to take into account is the aspect of reducing productivity, supply chain shock, and potential drop in innovation, driving risk. Now, trade tariffs, which I spoke about very basically, as I said, I bring them in because it is generally a hot topic in the space in which many businesses operate and many people talk about it. I want to go back a few steps and I want to bring in the perspectives from two organizations. The first one is the Global Risks Report. And the Global Risks Report from the World Economic Forum, the current report for 2025, it's the 20th year in which this report has been published, and it draws on the inputs of more than 900 experts from across multiple areas globally. And those areas are government, academia, business, you name it. So they draw from approximately 900 experts, and there's the additional views of around 11,000 company executives on leading risks in doing business within their countries. The Global Risks Report, published early 25, whilst it talks about risks at that point in time, and we need to always understand that the risk environment remains extremely dynamic and subject to change, the fundamentals of this report still remain very relevant to where we are today. Now, what came out of this Global Risks Report basically is that the world operates in a space globally where there is a continuing growth in division. And trade tariffs, interestingly enough, is one of those examples of growing division, where countries like the United States, as opposed to being more focused on global well-being, are dividing themselves from that environment and being focused very much on local well-being. So a world of growing division. And key areas where risks are prevalent within this space are related to state-based armed conflict, weather, geo-economic confrontation, and geo-economic confrontation is where trade tariffs fit in very well, mis- and disinformation, and societal polarization. I'm going to talk about these in my next two slides a little bit more. The second thing that comes is that in many respects, the world, or globally, we are at a space where in many areas related to risk, we're at a point of no return. And environmental risk is a very good example of that. I think many of us come from a space where we recall very well how the concept of climate change and environmentally based risk has been something that's been prompted and noted for many years going backwards. But never has it reached the point of no return. And we are now at a point where climate change is no longer truly a risk, but it has rather become an event. Climate change is real. It is part of where we are, and it is driving a lot of issues like extreme weather conditions that are impacting the globe on a negative basis. So environmental risks are becoming a reality and an urgent reality. A second aspect that has come out of the Global Risk Report is that there's an element of complacency around the pace of technological advances. And here, of course, we speak about things like the adoption of artificial intelligence, AI, a very relevant area. In many respects, organizations are lagging, not only in terms of the adoption of AI within the workspace, but more so around the adoption of the governance structures that allow the organizations to adopt AI in a responsible and appropriate manner. So complacency around that. And there are rising concerns around inequality and social support systems. And ultimately, this looks at saying, well, how can we collaborate on risk management approaches to shared challenges in a fractured world in a more responsible way. Now, the Global Risk Report basically highlights 10 key risks for 2025 that were considered to be of or present a material crisis on a global scale in the current year. And as you can see, the percentage purely relates to the percentage of respondents that considered these risks to be a key area. State-based armed conflict is, of course, the number one. And again, many of us are well aware of the fact that across the globe, there are multiple areas of state-based armed conflict. We have the situation in Sudan that is becoming a critical situation. We have multiple states of conflict in the Middle Eastern region. We, of course, have the conflict, the Russia-Ukraine situation, and beyond we have more. So state-based armed conflict, armed conflict, again, at one of its highest levels in history as we stand. More countries are in a state of war at present than ever in the past. So state-based armed conflict is a real risk, and it's around understanding how state-based armed conflict influences our businesses on a day-to-day basis. A very simple example, we all recall in the recent past the war-based efforts around Iran. And when the Israel-Iran issue erupted and the United States became involved with bombing of nuclear facilities in the Iranian space, there were organizations, the likes of British Airways. British Airways cancelled all of their flights to the Middle Eastern region. That's an example of understanding how state-based armed conflict and the impact of risks associated with that, how does that influence our business? Second area, extreme weather events, and the third, geo-economic confrontation. I'm going to talk a little bit more about extreme weather in a further slide, so I'm not going to go into more detail at this point. Geo-economic confrontation I've spoken about to a certain extent with talking around trade tariffs. This is really around where we have confrontation on aspects across geographies that result in economic impacts. Now, very interesting, mis and disinformation, the fourth item, and then societal polarization, which I brought in on my previous slide. Notice that the top 5 key risks, none of them relate to financial aspects directly. It is only when we get to economic downturn at level number 6 that economic aspects come into play. So all of our aspects that are risk related are all related to environmental, geopolitical, societal, and technological risks, not economic risks. So that in itself tells us that from a GRC perspective, our focus from a risk management view needs to be on risks outside of the economic space. This is just looking from a different perspective. So we know that state-based armed conflict is the number 1 risk in terms of prevalence. This purely just has a look at the top 5 global risks in terms of the impact that they have. And this impact, of course, is measured in monetary terms. So interesting to note that technological risks, and that's the risk around misinformation and disinformation. And you'll notice that down there, point number 5 in 2025, cyber espionage and warfare. So 2 of the top risks in terms of impact are technology-based. And it comes back to the fact that in the risk report, the aspect of complacency around technology-based risks is one of the key aspects that needs to be addressed. Time period based, this purely just looks and it says understanding that where are we today? We understand what our top risks are, and state-based armed conflict again coming in at number one. But where do people see the world globally? Where are we going within the next 2 years, and where are we going within the next 10 years? And why this is relevant again is because risk as a key input into the strategy formulation process, risk as continuously noting all the dynamic drivers that are impacting our organizations as we go along. We need to understand that we need to look at risk not only from a current, but also a forward-looking perspective. And what the top risk concerns over time period show us very clearly is that we are moving from a point of geopolitical risk and societal risk to a point of environmental and technological risks becoming more prevalent within the business environments in which we operate. Looking at the 10-year space, you'll see that the top 4 risks in 10 years are all environmentally based risks. And what that tells us is that from a business perspective, we should be establishing the governance frameworks today that allow us to manage the risks associated with the environmental and technological space more proactively to ensure that we position ourselves better in the medium to longer term. A second source of second source of information that I'm just going to make brief reference to, the slides I've just used all come from the World Economic Forum's Global Risk Report. I'm going to talk very quickly around some research that's done by the Internal Audit Foundation, again around risk, and you'll notice some similarities between the risks, bearing in mind that this comes from an audit-based perspective, so audit as a compliance-based function. And you'll see things like armed conflict are not on their list because they don't look at armed conflict as an area. But where you do see some similarities is in how the space is changing. And it's very interesting to notice that the 2 key areas that have seen material changes in the last year and looking forward into 3 years from now is the technological and environmental spaces. So here again, the Internal Audit Foundation, their research is showing that digital disruption, including AI, is going to become a key risk within the next 3 years. And climate change, you'll notice moving from 13 to the 5th level. And this is from an audit-based perspective. None of the other risks in those top 16 risks have material changes. Yes, they change. Cybersecurity, 73% moving to 69 in 3 years, but that's not material. The material changes are digital disruption moving from 39% to 59% of respondents in the survey indicating that it is going to become a key risk area. And likewise the same in the space of climate change. Expanding a little bit further just for interest, here we can see that the 5 top risks facing organizations today from this Internal Audit Foundation research, and picking up on the previous slide, this just looks at the differences across regions, Africa, Asia Pacific, Europe, etc. And you'll notice that fundamentally the top 4 risks, the cyber, the digital disruption, the business continuity risk, and the human capital risk, across all areas is a key risk. There are some differences geographically where you have Africa, for example, focused more on governance and corporate reporting based risks as a key area. And you have, for example, in the Middle East, financial liquidity considered to be one of the top key risks currently within the space. The top 4 are fundamentally all in agreement across the world. But what is interesting from this is if I add on the global average in terms of the time and effort that is spent by audit, an audit, as I said, as one of the key compliance-based functional areas, where they spend most of their time, you'll notice that the second area in the global audit average, the first area is, of course, on cybersecurity, with 69% of respondents agreeing that it was a priority area. The second priority area identified as a key focus area for audit is the area of governance and reporting. And governance and reporting is not on the top list of risks within the global space at this point in time. So what these slides are basically pointing to is potentially looking at how risk management can integrate more effectively with compliance-based environments to ensure that the compliance efforts within the organization are more focused on key risk areas as they pertain to the strategic environment in which the business operates. I did mention that I'm going to talk very quickly about climate change perspectives. And this also from the Internal Audit Foundation, basically just looking at where organizations sit in terms of climate change currently as a risk, what percentage of respondents see climate change as a key risk area, or where they see climate change in 3 years from now, and what that percentage point increase looks like. And whilst there are differences across geographies, as we can clearly see, we'll see that Asia Pacific, for example, is going to show the highest level of climate change as a key risk in 3 years based on respondents' inputs. I think we can fundamentally agree that across the globe, everybody is seeing climate change as a key area of growth in terms of risk going forward. And that implies that from a risk-based perspective, we need to understand how climate change, and specifically aspects associated with climate change, are going to drive and influence the organization going forward. Things in terms of, for example, climate change is going to influence water security, access to water. How is this influencing our business? And then the last aspect, coming back to the World Economic Forum's Global Risk Survey, is, well, what do people see over the next 2 and 10 years in terms of the outlook for the world overall? Moving from a very calm perspective where there's negligible change in the risk environment, negligible risks being faced, all the way through stable and settled, turbulent and stormy situations where global catastrophic risks loom. And it's very interesting to see that in 10 years from now, that in excess of 50%, in actual fact, 62% of respondents see the risk space in 10 years from now as being highly turbulent and stormy, which again points to the fact that global risk space is going to become ever-changing and more dynamic as we go forward. So I've spoken very broadly and very quickly around a couple of risks from 3 key areas, the IMF, the WEF, and the Internal Audit Foundation. And in summary, I think I'm going to say that digital disruption and climate change risks are of the fastest growing risks within the next 3 years. And that implies that from a risk management perspective, a lot more focus needs to be placed on those 2 key areas. And when we talk about digital disruption, bear in mind that it covers many spaces. So for example, it says that it will expand into areas like human capital-based risk, with the adoption of AI and how we ensure that from a human capital management perspective, we ensure that we have the resources that have the capabilities that are necessary to drive technology adoption and to be able to successfully counter the digital disruption risks. And it's around ensuring that from the present and preparing for the future, that the organization clearly understands, well, what are the key risk drivers that are relevant to the organization both today and going forward. How we as an organization provide performance-based, I call it performance-based information, that is around key risk indicator-based information, to be able to inform the board around what the key trends are in the areas of technology, climate, regulatory, and political or legislative change, around how we enhance our ability to connect risk-based information to strategy formulation and strategy implementation, and around how we support the development of an AI governance-based framework within our organizational spaces. So I'm going to close off with that and just say that we've basically spent around 40 minutes talking very broadly around some key risks that are prevalent in the 2025 space and looking forward. I can mention that from a GRC course perspective, we have two upcoming courses, the Advanced GRC program and the GRC programs. On the next slide, I'll share that with you. And they cover a few areas as outlined on this slide. We're going to talk about concepts, principles, and elements of frameworks and how we link GRC frameworks with strategy, performance, and sustainability. And looking at how key influences from a macro perspective, including risk, of course, influence us. And covering governance, risk, and compliance in a lot more detail than what we can do in a webinar. So for any of you that would be interested in joining one of our upcoming courses, Informa would welcome you to join. We have, as I said, the certificate in advanced and the certificate in governance, risk, and compliance, and the QR code that is on the slide presented. You are welcome to scan that QR code, which will link you directly to both of the two programs, providing you with more detail. Alternatively, you are welcome to communicate with Informa directly, either through the web or through mail or telephonically, should you require more information around these programs. So from my side, I'm going to say thank you so much for taking your time out today to spend it with me. I hope you did find my brief chat in this webinar insightful, and that it provided you with some information and insight into the risk-based space in 2025. And at this point, I'm going to open up to any questions that may come from the attendees.
Okay, thank you so much, Peter. That was fantastic. Yeah, so the Q&A button is available at the bottom of the screen. If you have any questions, there's still a bit of time for you to put those questions in there. We've got a question here, Peter, from Jasvinder, going back to the tariffs topic that you were discussing. Could US imposed tariffs drive deglobalization trends and reshape the international risk environment?
Oh, now we can have a whole webinar just about that. So it's a very good question, and yes, absolutely. US tariffs can drive deglobalization. However, I think we operate in a highly globalized world, and if we have a look at trade statistics, very interestingly, over the last 6 months, whilst trade has in certain key areas like China, and China, as we know, is the second most dominant economy globally as we speak, whilst it has had more of a negative impact on the Chinese economy, global trade has remained extremely robust. And the simple reason for that is that the world continues to rely on global trade to be able to do what we do. And a very simple example of that is if you have a look at the US-China situation, and you notice how trade tariffs have been imposed at very high levels. However, there's a lot of give and take. So if you have a look at things like microchips, and the fact that China is extremely reliant on the US for microchips to be able to progress technology development, there's give and take. And the US understands their need to be able to export product for their economic benefit, and so there's give. We'll reduce the tariffs on microchips and allow China to import them. So it's looking at one specific aspect, but yes, tariffs can most certainly drive instability in global trade. They can most certainly drive changes in local production environments, and they can drive substantial changes in supply chains globally. But at the end of the day, global trade and globalization will continue to prevail purely because of the fact that there is a continuous need to access materials and products across geographies on a global level. I hope that responded suitably to that question.
Yeah, actually, a follow-up from Victor on the tariffs question. In the light of the effects of tariffs on global expansion, how do we regulate to ensure it's fair across the board?
So I'm thinking very quickly to Victor's question. In the light of the effects of tariffs, and the effects of tariffs on global expansion, of course, implies, I trust, Victor, that you mean a decrease in the level of global expansion. And if you talk about, I'm not totally certain about why or what your question relates to in terms of regulating to ensure it's fair across the board, because tariff imposition, of course, is something that is done not on a global level, but on a localized regional level. You know, the United States is driving the imposition of tariffs across multiple countries across the globe. And those countries might retaliate with the imposition of tariffs themselves, but there isn't a process to regulate the level of tariff imposition that takes place. So I'm a little bit uncertain as to your question around regulation. Victor, I don't know if you want to expand a little bit so that I have some more context.
Okay, yeah, we'll wait for that. If you're okay, we can move on to a question from Rohan. In such a challenging environment and ever-changing landscape, how do we navigate the twists and turns? Predictions / forecasting are becoming a novelty in current times.
Well, my answer is going to be extremely broad. I think I did allude to the fact that we operate in an environment that is extremely dynamic, and that the risks that we are facing continue to evolve and change as we progress. And I'm going to just draw on 2019, 2020 as a simple example. I think it is safe to say that in 2019, December 2019 to be precise, 99% plus of organizations had no idea or had no reference to global pandemics as a key risk within their risk frameworks. And of course, by February, March 2020, the world was in lockdown and we were all facing the impact of an event, not a risk, an event of a global pandemic. And we started identifying risks associated with that and seriously questioning our ability to identify these black swan events that we face. So I think my answer to the question, being very broad, is that we need to position ourselves from a risk management perspective to be continuously aware of what is happening out there in the environment in which we're operating, not only from a regional, but also from a global perspective. And being able, with the information, so it's around business intelligence, I'm going to use that word, risk management, having access to good business intelligence, using that information to make insightful decisions around how the dynamics within which we're operating can influence our strategies positively or negatively, to be able to provide inputs to boards and executives as to how they can make decisions around strategic change going forward. So around being aware and being able to have structures that allow us to continuously provide inputs into the business around how dynamic change within the environment is influencing our strategic positioning.
Okay, right, we've got a whole influx of questions. I'm not sure if we're going to be able to get to them all. First one from Gunther is, can US tariffs, if well balanced, lead to a better distribution of value-adding economic activities in different countries and regions, having potentially positive impact on the very long term also?
Ooh, Gunther, you ask a difficult question. So I think it depends very much on the view of the individual, but what I am going to say is the following. I think we need to understand that tariff impositions result in economic impacts, and those economic impacts are felt by the end consumers. So who pays for tariffs at the end of the day? It's the consumer. And I think we're all well aware of the fact that on average, it is already being stated that the average American consumer is now paying higher prices for products based on the fact that the United States has imposed tariffs. Now, why are they doing this? They're doing this to be able to drive the protection of local interests, driving improvement in the American economy, not the global economy, the American economy. So what tariffs do is tariffs fundamentally change the dynamics of the economic landscape. And whilst they have positive influences in some respects, they also have negative influences. So there are both opportunities from tariff and there are risks associated with tariffs. And I think depending on the area in which you are, you've seen from the slides that, for example, inflation. Tariffs are going to drive inflationary conditions in most parts of the world. In China, it's going to drive deflationary conditions. And there is a big difference between deflation and inflation, and managing the risks associated with those two. So I think my answer is simply to say that I think it's incumbent on every organization, the risk management teams in organizations, to understand how tariff impositions influence them, both from an opportunity and a risk perspective, to be able to manage those. It's not going to necessarily drive improvement in economic well-being. In actual fact, based on what I've shared with you, it's going to drive a reduction in economic well-being. It is going to drive a lowering of global growth rates, which means economic well-being is going to be reduced over time. So I hope that answered that question.
Yeah, we've had a huge influx of questions, but we've got a few minutes left, so we'll get this one in. How should regulators and companies prepare for spillover effects from global risks like geopolitical fragmentation or supply chain disruptions?
Sorry, Deep, just read that to me one more time.
Sure. How should regulators and companies prepare for spillover effects from global risks like geopolitical fragmentation or supply chain disruptions?
Okay, very good. So I think the question relates to two different areas. So from a regulatory perspective and from a business perspective. So I think the key role of regulators is, of course, to ensure that they continuously provide an environment that is conducive to driving economic well-being within the area that they serve. So regulators, why are they there? They're there to put regulations in place that regulate how businesses operate. So that's my starting point. And I trust regulators may extend beyond that scope from the questions point, but I'm looking from the perspective of regionally based regulators. So generally regulators driven from government perspective. From a business-based perspective, I think what is necessary is that organizations need to position themselves, again, as I've said, so that there is a constant awareness around how geopolitical aspects and defragmentation has the ability to impact the organization, both from an opportunity, because there's always opportunity, and a risk perspective. So it's positioning themselves in terms of ensuring that there is a continual awareness around what the environmental influences are and how those, and making good assumptions around how those environmental influences are going to influence the business environment going forward. Again, I hope I answered that question. A very broad answer, but I hope it was appropriate.
Sure, yeah. We've reached time. Do you mind just doing 5 more minutes, Peter?
I'm very happy to spend any time you need.
Okay, sure. So Athos, it's got 3 questions, but we'll just pick one. What are the top global risks facing organizations in 2025?
Okay. So I think, again, I've drawn on and extracted the information from the Global Risk Report, as you saw from the World Economic Forum. And based on them, well, we had the 3 top risks, which were state-based conflict, as you may recall. And in actual fact, I'm just going to go back to that slide to make it quite easy. So there we go. State-based armed conflict, extreme weather, and geo-economic confrontation. So notice that geopolitical risk and environmental risk are the top risks facing organizations today. Understand that these risks, and we did say that on a geographic basis, that across the globe, most continents, the respondents in surveys agreed that the top 4 risks were all top 4 risks. So these are the top risks facing organizations today in 2025. We are aware of the fact that going forward over the 2-year and the 10-year time frame, that risk landscape is going to change. And you might recall that I said that the environmental and the technological risks are going to become the key risks in the future. So moving from a geopolitical environmental to a technological environmental. I hope that answered the question in terms of what are the current risks.
Yes. Okay, so next question. What is the status of the US dollar as a trading currency, especially considering how extensively we use it in our business operations?
Okay, so interesting. The US dollar, again, a lot is dependent on how dynamic the environment associated with Trump administration decisions is going forward. But as we stand right now, we find that the dollar is actually depreciating as a global currency. And currencies like the euro are showing a lot more strength and resilience at a global level. So what is the position of the dollar as we speak? The dollar is currently facing challenges in terms of value depreciation. However, we must understand that that is an immediate impact associated with sentiment that exists around the current geopolitical and geoeconomic space that we're operating in. Once we get stability back into the market, so once things like tariff impositions have stabilized and the world continues to operate within the normal space, then you'll see that the dollar will probably come back to a level of stability. America continues to be the largest economy in the world, and it continues to be a leading driver of global well-being. So the dollar will always be, or not always, but will in the near term remain a very strong player in the financial market space. That's my view.
Okay. Next question. How can SMEs align internal governance frameworks with UAE national sustainability and corporate governance initiatives?
All right, so now we're coming to an extremely regionally based aspect. So we're talking about SMEs within the UAE aligning with UAE-based regulatory frameworks, if I'm understanding the question correctly. And I think we're getting a little bit into a deeper level of detail when we look at the alignment of governance frameworks. So we're going outside of the risk-based space. But what I am going to say again, and I give the same answer as I gave with respect to risks. I think it's important that from an SME perspective, SMEs need to understand, we know that SMEs generally tend to operate in a space where they have restricted access to resources. They are SMEs, small micro enterprises. We don't have high levels of human capital, of talent, etc., to be able to drive a lot of activity. But I think it is necessary that SMEs, particularly at the SME board, come executive level, the people that are driving those SMEs, that they establish the environments that allow for the continuous awareness around the need to be able to apply and comply with regionally based frameworks that are being established and imposed, not only from the position of ensuring good governance and compliance, but also from the position of positioning the business more competitively within the space in which it operates. So again, a very broad answer.
Okay. Right, so I think we'll probably leave it there. Peter, thank you so much for that. It was extremely interesting. And I'm sorry if I didn't get to your question. We've run out of time. But as Peter mentioned, we've got obviously our whole suite of courses in this area, especially Peter's courses, which are, in the GRC realm. So yeah, please look out for that. And I think you'll agree that, Peter's got a wealth of knowledge, and if you do attend one of his courses, you will gain a lot from that. So yes, thanks so much, Peter, again, and signing off. Thank you.
What if you and your team can be even more informed, competitive, accomplished, even more successful, with programs designed to inspire and empower everyone to become even more? Introducing Informa Connect Academy. With hundreds of global, digital, and in-person training courses led by world-renowned industry experts, reimagining learning experiences for even more unlocked potential. Informa Connect Academy, available at informaconnect.com/academy.